We have an update on Canada's economy this morning. Real gross domestic product is up for a second straight month. The GDP rose 0.2% in February, but it is below what analysts were forecasting. This follows a half percentage point gain in January. Service-producing industries led the growth in both cases. Here with more analysis is Bloomberg's Paul Bagnell. He's in Toronto for us this morning. So, Paul, what's going on here? What is driving this as we miss our outlook?
Well, there's more. It's good to be with you, Marcia. There's more evidence of a slowing Canadian economy. Higher interest rates have been a part of that story. They've been part of the Bank of Canada's plan to bring down inflation. I'll read the numbers in just a second. The important thing to bear in mind is the trend, which is across the board. All of the numbers that were reported by StatsCan this morning are, as you said, weaker than expected. So Canadian economic growth weaker than expected at its most recent reading. And what this means, economists say to the Bank of Canada, is this makes it a real possibility that the Bank of Canada could cut its benchmark interest rate in June. There are two dates that everybody's watching now. June the 5th, the Bank of Canada is scheduled to make a rate announcement on that day, and July the 24th. The bank also due to make an announcement on that day. So here are the numbers that were reported today. On an annual basis, the annual pace of gross domestic product growth in February came in at 0.8%. That's a long way short of the 1.1% that economists were expecting. As you've noted, the monthly growth from January to February was 0.2%. That was weaker than expected. Moreover, StatsCan issues a so-called flash estimate on days like this, and that's a preliminary estimate of, in this case, the March number. And StatsCan is saying that gross domestic product was likely flat in March, no growth from February to March. Now, that could be revised the next time we hear from StatsCan, but that's what they're saying today. This all adds up to probable first quarter gross domestic product growth of 2.5%, and that is also softer than expected. So the takeaway is the Canadian economy is slowing more rapidly than economists had forecast. This could set the stage for the Bank of Canada to reduce its benchmark rate from 5% on June the 5th. What the market is saying about this, there's a corner of the fixed income market known as the overnight swaps index market, and that's where investors essentially play the probabilities on interest rate cuts. There's currently a 50% chance being expressed in that market that the Bank of Canada cuts on June the 5th, and a 100% probability being expressed for July the 24th if it doesn't happen on June the 5th.
Could it be both? Could it be
highly? I think most economists would say that's highly unlikely. Anything is possible, but for it to be both, you would have to see, I think, signs of Canada maybe slipping into a recession, and people don't see that yet. Many of them see a so-called soft landing as more likely, and it would be unlikely that we would see such a dramatic deterioration in economic performance in Canada during the short period of time between now and June.
Got it. So before you go, I was just looking at the markets. How are they responding? I see the dollar is down almost half a cent.
Right, and that makes sense, and that happened immediately after these numbers were released at 8:30 a.m. Eastern Time. And the thinking is like this. Keep in mind that lower domestic interest rates, all other things being equal, are negative for a domestic currency. And that's because the country becomes a slightly less attractive place for investors to park their money because they would be getting less on interest-bearing instruments. So the currency market's thinking is a June cut is more likely than it was before these numbers were released. That makes that would make the currency less attractive, and so the currency sold off, as you say, by about half a cent. And the big thing that affects the loonie, Marcia, is perceptions of when the Bank of Canada is going to cut, compared to perceptions of when the U.S. Federal Reserve Board is going to cut. And many people think the Fed is not going to cut until September. So the Bank of Canada cutting in July, let's say, or even June, the Fed waiting till September. That's the kind of dynamic that is positive for the U.S. dollar, negative for the Canadian dollar.
Oh, good to know. Paul Bagnell for us. Paul, thanks for joining us with this breaking news this morning. Appreciate it, as always.